Welcome to our monthly market update for January 2026. I'll quickly summarize three key themes that have been moving in the market in January. Even though there's been so much that has happened in January, with the month starting off with US extracting Venezuelan president, that didn't really have much effect on stock markets. However, the dollar continued its decline versus other currencies driven by geopolitical uncertainty, as well as the dollar debasement trade. However, we see lots of stock markets continuing to do very well on the back of a weaker dollar, especially things like emerging markets and Asian equities, such as the South Korean market, have performed exceptionally well in January, both being up over 5%. The South Korean markets have been driven by a surge in memory chip prices. Their big memory chip producers, Samsung and SK Hynix, have been driving the index higher, whereas the emerging market complex remains extremely undervalued compared to developed market equities, which have gained in value purely because of dollar depreciating versus the rest of the world. So markets have experienced a positive momentum in January 2026. Bond yields were slightly higher. Looking into bonds, we came into the new year looking at rate cuts, about 2 rate cuts expected. Overall, bond yields have been not volatile, but muted in overall reaction. They were a tad bit higher in January as economic data was a lot stronger than expected. So we are seeing a lot of positive economic momentum coming in from the US as well as Europe and rest of the world, which is keeping bond yields stable and close to where they are, roughly around the 4% levels. One of the big movers, and this is something we've been managing very carefully, is alternatives. And within alternatives, especially gold and precious metals, they have had a phenomenal year of 2025. And in Jan 26, the price action was absolutely parabolic, especially for the likes of silver, which we were looking at a chance to taking some profits. We've been trimming our exposure to gold and precious metals since end of last year. And we've been very worried about this being in a real kind of a bubble territory. We did see a lot of volatility at the end of January, especially in prices of silver. These are moves that we haven't seen in ever, with silver prices being down roughly 30% at one point in time. So there's been extreme volatility in the precious metals complex, and that is something that we are managing very carefully by sizing our exposures as volatility rises within these markets. So if you'd like to know more about how we are managing risk and how we are managing portfolios and looking for further opportunities, please do get in touch with Elston.